Good morning, traders from Chicago. It is 8:01 a.m. my time on Monday, the 30th of October, 2023. Thanks for joining me after a brief break. You probably noticed that my voice isn't what it normally is. It's a bit of a cold or something. It'll pass. This is episode number 2563. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's get into it. This is the convergence trading pre-market summary sheet. A lot has changed. Of course, this wasn't out all of last week, but it's important to notice that the rotations for the most popular futures products have gone up. Substantially, actually. The current market sentiment is risk postures, mild risk on, with the Russell and the NASDAQ leading the pack. We're opening in a gap up. This morning we had McDonald's reporting. There are comments from McDonald's as we speak. McDonald's has reported $3.19 versus $3 on about $6.6 billion. But also we got several others that I'm not going to get into here. PetroChina, HSBC, Bank of China, Thomson Reuters. We don't have anything major after the close, but we are. We do have a very, very busy week this week. We just got the German inflation number. German inflation came in softer than expected. The year-on-year prelim came in at 3.8% versus 4%. And the inflation rate month-on-month prelim came in at 0%. The expectation is an increase of 0.2, the prior 0.3. So that's pretty positive. Spain saw the same kind of positive news, inflation relief overall. For the rest of the week, you can see in the pink section on that sheet there, we have the French GDP, French inflation tomorrow, Eurozone, Euro area GDP, Euro area inflation. We have the Chinese Caixin manufacturing PMI. But we also have Pfizer, AMD, Amgen, Caterpillar, British Petroleum, BASF, which is a component of the DAX, and Foxconn out of China tomorrow. And then Wednesday, we have US ISM manufacturing PMI, the JOLTS job number, job openings number, and then most importantly, the Fed interest rate decision and press conference. Now, we've received some interesting feedback from Jerome Powell in the last couple times that he talked. It seems like there's a little bit of there's a bit of dovishness with a move to caution, basically looking for the market to do the job of the Fed. So this rate decision is going to be very important. That's coming up this Wednesday, the 1st. We have Australian balance of trade. Earnings-wise, we have QCOM, Qualcomm, Sony, Mondelez, CVS, which is a pharmacy, very large, Airbnb, GlaxoSmithKline out of Great Britain, and several others, PayPal, AIG, and so on. Thursday, we have the Bank of England interest rate decision. And then we have Apple after the close, a very big one. Apple, $90 billion in revenue quarterly, just massive. ConocoPhillips, Eli Lilly, Starbucks, and Cigna Health. And on Friday, we have German balance of trade, the Canadian unemployment rate, but also we have the U.S. unemployment and non-farm payrolls on Friday, along with U.S. ISM manufacturing. And then the only earnings we have on Friday of value are Berkshire Hathaway's. So overall, what's driving things? What's in the news? What's the big picture? The big picture right now is that you still have this mess in the Middle East, this basic offensive going on between Israel and Gaza, and that's causing jitters in the oil markets. The oil markets are coming off, responding to growth worries, and the situation in the Middle East being less disruptive than expected or than what it sounded like. GDP growth is better in Germany. That came out this morning. GDP growth, I don't think I went over it, but yeah, it came in better. And then the Eurozone, Euro area economic sentiment was better as well. With the Fed decision coming in on Wednesday, the action is likely to be tempered here. It looks like the market's trying to post a reversal. We'll see how it does today. We'll get into the technicals here in a minute. But as far as for the rest of the day, you have your calendars. I'm not going to go over it. The biggest piece is the Japanese rate decision, Bank of Japan rate decision this evening. Looking at the S&P appears to be balanced to trending upwards, but really it's put in a double distribution profile, so it should be multi-distribution, but it's a relatively balanced trade. Essentially, the S&P has put in an overnight point of control right on top of where it traded on Friday before it fell off on the close. And the volume is pretty strong. 206,000 contracts traded so far. If you notice, the overnight stats have shifted quite a bit. The mode of volume has gone up from 170,000 to 260,000. We're below that mode, but we also still have 22 minutes trading before the stat is done. It stops right at the U.S. Open. The inventory so far is 100% long, so 277,000 contracts, all traded above the Friday close, making the inventory 100% long, 25.5 points of range, pretty decent range. You can see the mode here is 24. Nothing exceptional. The point of control is at 41.6175. Again, crude coming off a little bit. We can see silver popping, and we see copper popping a little bit. And then, of course, I'm sure you've heard about crypto taking a massive spike over the last few days of last week. So that's where everything stands. Let's take a look at the market and look and assess where we are. Now, I wasn't here last week, so I've had to do my kind of reacclimation walkthrough, if you will. And looking at the action here, you can see what's going on fairly easily. During the week that I was here, very choppy market, very balanced, up top, right underneath the 4,400. And then from there, we started to trend down. We opened imbalance, we broke lower, we closed lower. And then finally on, the next day we open, we test up into the balance, we close lower. And then the next day we open on the edge of the prior day's profile, taking back the non-farm payroll rally. Remember, the last non-farm payroll last month had a very big surprise to the upside. Came in at 336,000. Consensus was for 170,000. So we had this massive rally on the open, and we've taken all of that back all the way down to 42.51. And since then, it's still one time framing down. There's a bit of a break here, but the market condition currently, the overall market condition is imbalance on the sell side. So we have a selling imbalance coming in to today, except that Friday was a double distribution profile, and the market has rejected overnight the lower distribution where it closed, where the point of control is on Friday, which is down here, the volume point of control. It's rejecting that, and it's working the upper distribution. So it seems to be staging. It seems to be staging an attempt at a reversal. We've moved quite a bit to the downside. We've covered quite a bit of territory. You can see we have not been here in quite some time. So let's look at the composite. So you can see it's been quite a bit of time that we've been here. We had a pretty decent balance area down here in the 4230-ish point of control, and we've squeezed below it, and we're making our way back. So today, the key element to look for is whether or not the traders, the participants, push the high of Friday. Friday's high is right up against the point of control of Thursday. Thursday closed at the lower end of the range away from value, so we expect the market to pop back up. And on Friday, what it did is it tested that prior point of control before proceeding downwards and balanced and choppy for most of the session, and then running away and forming single prints and a pretty decent sized lower distribution. So we have a double distribution profile. So today, it's really about, do we hold the 46 or test it, or do we hold the 70, what is it, the 76 is it? Something like that, the high of Friday, let's see, 76.75, 76.75. So, what do we do if, and it's a big if, because we're trading at 41.62 currently in positive on the session with a mild risk on sentiment. If we decide to test up and push down, get into the 46 and then break the 46, then you have a gap to settle trade. You're looking for a pullback into the range to sell back into 41.37, and it makes the low of Friday vulnerable. But if we are unable, if we open and test down into the 41.56-ish, 8-ish, and are unable, we get our impulse higher, then it's very, very likely to target 41.76.75. So it's very, very likely to end the one-time framing down, which is very likely to squeeze participants back into the 4,200 range. That'll be the next area we are likely to test. And that's what I'm looking for today. I'm looking for to base today and then try to turn around and break the one-time framing up. Essentially what this has done, the problem with that scenario is this. There's no excess on the low, which means that the market has not really done a good job finding buyers yet. It did so overnight. So let's look at the overnight chart. Here's the overnight. It's done a pretty decent job of holding higher, gapped up on the open, and left the settlement price open, and has basically surfed the full session mid, full session VWAP, which appear to be in control currently. But where we find ourselves right now is right on top of the point of control. So it's got some fuel. There's quite a bit of volume up here for the next move. But is it likely to respond back and push below the full session VWAP and mid and start working towards settlement? We'll get early clues as it drops below 41.55 or so. But more than likely, the overnight stat's going to come on the plus side, and it's very likely to push Friday's high and reverse. I don't expect too much. I'm not expecting it to be a 60-point day or anything like that. But it'll what we have not done properly is when we look at the low of Friday, we have no excess. There's no swift rejection of the lows. So to me, that leaves the auction looks suspect to me from the side of buyers being strong. I don't believe buyers we've seen strength from buyers yet. So this morning, I'm going to sit out the first bracket. I need to get reacclimated. I'm going to sit out the first bracket, and I'm going to wait to see what it wants to test and what it's accepting or not. If it clears the 46, then this low is likely to go today. If it doesn't, then the high is very likely to go today, in that if any test down into the single prints that gets rejected with an impulse up tells me that I need to lean to the long side. Again, the market condition overall is for selling. It's a sell side imbalance, one time framing down, and it is imbalance. It's opening imbalance. It is trying to reverse, but I'm not going to trust either side, and I'm expecting it to be relatively choppy this morning, relatively sideways. It has to, one thing's for sure, it has to show me what it wants. I cannot try to front run or predict what it wants. It has to really unequivocally prove to me that it is rejecting this upper distribution, right? It's rejecting this, and it wants to go back down to the lower distribution. And when it does, it creates an opportunity to target that low, to target the Friday's low. But overall, just be aware that it is opening in balance in the overnight, as well as against Friday, as well as against Thursday's profile. We're not opening in the lower distribution out of balance this morning. So it needs to do it needs to prove itself for a true bias or a confident bias to kick in. Okay, so that's the ES. NASDAQ, again, showing strength against the relative strength on a daily basis. The NASDAQ having an inside day and is in the upper distribution. The NASDAQ looks like it is very likely to end its one-time framing down. The NASDAQ looks like a better opportunity. It looks coiled for a big imbalance type move up. And in the NASDAQ, the target becomes 600 above if it does break the high of Friday at 407, 408. The NQ looks more bullish to me than the ES does. Crude's been interesting. It had a bit of a run up, as a result of this geopolitical news and the potential involvement of Egypt in this fight. And the failure of Qatar to really implement the ceasefire, the vote down in the UN with the US, UK, and others voting down a resolution for a ceasefire and humanitarian relief, and so on. Crude has to respond to that because that area is very energy rich. The Suez Canal, and there's a lot going on in that area. And so crude has been all over the place. But overall, the market condition for crude is balanced. So be careful picking a side and looking for a runner on crude. It's very likely to be indecisive. It has pushed up, pulled back right into where it was right here, and it's sitting, as long as it sits below the 86 here, it's in a big chunk, and it's opening right against the point of control given the most recent information. So crude is off today, but it's also in balance. You can see the open is an open auction in range, in value of Friday. It tried to close away from value in the point of control and was unable to sustain that. We always suspect a close away from value and snapping right back to where balance is, right? So here's balance, balance, balance. Those are all the points of control on top of each other, and crude is opening right there. So take it easy if you're trading crude. I'll leave you with that. Hopefully my voice is better tomorrow. and I can clear this thing so I don't sound like a what are those things called they use in the World Cup? Vuvuzela or something like that. Those really loud, obnoxious horns. That's what it sounds like to me this morning. That's what my voice sounds like. Anyway, glad to be back. Gonna take it easy, and just bide your time. It is the interest rate decision week for the U.S. as well as non-farm payrolls. There's a lot the market has to price in, so it's very likely to be a choppy week until that happens. Take care.